We're back. What's up, everybody? We're here. We're here. Did I say we're here?
Yes.
We are back, everybody. All right. And here it is, the all-star team himself. There's Peter. Make some noise for Peter, everybody. And of course, Fire Red is there as also. Make some noise for Fire
Yes!
Red. What's going on, people? We are back.
Yes.
Listen, I've been getting phone calls and emails. Hey, show, what was that episode? Hey, what episode is this? What are you guys talking about next time? What next show? I'm like, okay, people. Yes, I know. I made a mistake because when I said, oh, we'll see you guys Friday, everybody was like, I don't see them. I'm like, okay, guys, they're coming back. Trust me, we're going to have them back. So how was your guys' weekend? Everything good?
Everything was fantastic. I had a nice Mother's Day. By the way, today I got my present for Mother's Day and finally arrived. But
I told you it's coming. I told you it's coming.
Yes. Thank you, Charles.
Oh, Peter, how was your weekend, buddy?
It was really good, I ended up at mom's house, kind of brought a couple lady friends over, and I think it was a little too much for her boyfriend, so got like real turned up for a family dinner, but it was good. It was fun.
That's all it is, man. That's all good. All right. So today's show is all about how to earn passive income. And if people don't know what passive income is, while you sleep, that's all it is. While you're sitting there and sleeping, just chit-ching. It could be little cents here, could be big money. But the whole thing is, while you're doing nothing, money's just coming into your account. That's how what you want to do in life is just make passive income while you're not working, playing with your kids, going to the park, sitting at the movies. Money is just rolling in. So that's what we're going to talk about is how to earn passive income. So Peter, take it away.
Before he said something, I want to put this point, guys. Did you see the price of Ethereum? Oh my God. I was like, what? I know you told me so. I know you did. I know. I wanted to bring that up.
She couldn't hold it. I was like, okay, hold it till after. She's like, I gotta tell you. I'm like, all right, here we go. All right.
No. So it's interesting times, amazing times to be in cryptocurrency and the whole new digital asset system. It's a very unique time to be alive, and things are going to keep happening like that. And when you get to crypto investing, sometimes you'll see that, but if you don't take more action now, you might very easily see Bitcoin at Ethereum at $10,000 in a few weeks or months. And then be like, oh my God, wasn't it just 4 the other day? Like, that's how it happens. But the scary thing is, though, like, you have to watch out, though. At some point, we are going to probably hit a top. So I don't know if it's going to be 5 or 10 or even 20 for Ethereum, but then it will correct, right? So the biggest concern is get into it now and take advantage of the gains to come. And then when it goes parabolically up, if it does, the way usually crypto assets work, you want to take some profits and move it into either Bitcoin or different digital assets, or even take some profits and buy something with yourself, right? So this is the time to take action. Don't be the person that's buying Ethereum at $10,000 or $20,000 saying it's going to $1 million for sure. It's the next bigger Bitcoin. Don't do that. Own Bitcoin, own Ethereum, diversify yourself like we always talk about. So getting into the space, the topic today is residual income. But just very quickly, again, I'm going to elaborate for people that haven't seen the show on mining and staking. Because understanding how to get true residual income from cryptocurrency, you have to understand something called staking. So very quickly, I'm just going to go back into mining, just a quick elevator pitch, right? So why Bitcoin is special, I always say every episode, it's digital rarity. We have something digital and rare. Everything else that was digital before, you can make many copies of. So how was this possible? It was by cryptographic mathematics that computers do to verify a very encrypted math code. And more computing power went into this. And as of 5-6 years ago, Bitcoin was the biggest computer network on the entire planet. So how we secure our network is through cryptographics and computing power. So that was Bitcoin. That's the OG of cryptocurrency. And that is the model that started. But shortly after Bitcoin, a few short years, I think one of the first ones, I don't even know if it exists anymore on any relevant market cap, would be Purecoin. I remember Purecoin was one of the first staking platforms in 2015 times. But then since then, many platforms came out. And to understand what staking is, it's using the same cryptographic not the same, but similar cryptographic mathematics and coding to secure a network. But the difference is it doesn't need massive amount of computing power. It just needs to have a solid code, a solid base, solid encryption. And instead of using the more computer power, the more likely the reward, it actually uses the digital asset. So the more of the digital asset you possess, whether that be Ethereum, whether that be Polkadot, whether that be pure coin like back in the day or whatever it is, the bigger that asset box is, the more residual income you will get on it, or the more interest you will get. Because how certain networks get verified is they get verified by people taking part of that coin and putting it into a place where it's saying, I'm not trading this coin, I'm using this coin to secure the network, and then they're getting given rewards. So that's the basics of mining and staking, so people understand. And staking is the way that you're going to get returns on your, for example, Polkadot. Binance, Charles loves Polkadot, so we'll go into that. That's a perfect example, right? So right now, Ethereum, I would buy and hold, and if you're going to stake it, you're probably going to use it through a different kind of party to do it, because it is pretty complicated. Unless you're a coder, unless you're a hacker, cryptographer yourself, most likely you're going to use a platform. But for example, why I'm recommending Polkadot for people who are serious about residual income, it's the safest play, in my opinion, for anyone new to cryptocurrency to get true residual income. Because what do we talk about? What is the best way to keep your cryptocurrency? Off the internet, somewhere it cannot be hacked, it cannot be taken, it's there, it's secure. So Polkadot is actually one of the coins available on the Ledger S, which I recommend fairly commonly. And if you just move your Polkadot to Ledger Nano S, you get 10% annual returns on your Polkadot. So meaning if you have 10 Polkadot in there, at the end of the year, you have 11. If you have 100 Polkadot in there, at the end of the year, you have 110. And this doesn't have to be locked in. Like, you could put it in there for a month, gain some kind of staking reward, pull it out. It'll be most likely like whatever, 0.8% or whatever, a 12th of 10% is, right? So it's not like you have to lock it in like you would for a bank for a year. It's just where you keep your wealth. So people with bigger amount of capital getting into this, you want to make sure you have your Bitcoin, your Ethereum off the internet. And then, for example, you want to get into residual income, you start staking your Polkadot. And that is the safest way to go about it. Now, for the smaller and newer investors that are maybe more risk adverse, maybe looking for more returns in the short to midterm, and again, big money, get it off the internet, get it on a private key, and you can still get residual income. But now let's move to the masses that are more smaller investors. They're putting in something that they're willing to lose. It's not going to be life-changing for them if they make a mistake. But if you don't make any mistakes, there is lots of great options on platforms like Binance, for example. So instead of, if you don't have a ledger, you have a small account and you own even one Polkadot or 10, let's say 10 is a very achievable number, you would get, Binance gives you 10% residual on your Polkadot just by holding it there. So for example, I still currently use Bittrex just because grandfathered in old habits, right? So I've never, as much as I preach Binance, I'm just going to be getting onto Binance for the first time. Like, I joined when they opened, but I didn't actually use them to trade. So I'll just, because I've been in leverage trading more recently, the last couple of months aggressively. But once I'm back to just diversifying, like, I still diversify my profits. I just haven't like chased anything on Binance. The one thing I regret is not having Binance token. So if I used it more often, I would have that when it dropped. But no big deal. There's so much opportunity in cryptocurrency that never feel that because a coin you watched or a digital asset you're paying attention to, boom, that you missed out and that you shouldn't get in. The opportunities are nonstop. As long as you do the research, you make the right actions into the right platforms, you don't join scams, you buy actual digital assets, cryptocurrencies that are verified, that have huge computing networks, huge networks of people using it, you're going to do well. There's going to be lots of opportunity there, right? So do your due diligence and don't feel like you missed out. So back to staking, right? So the people that are newer, you could go, for example, on Binance and just stake your Polkadot there. But there's other tokens you could also stake. I keep using Polkadot as example because I like that they pay you 10%. But now let's say you're a different kind of risk-averse human. There's rewards that almost, not that they don't make sense. Like, for example, Uniswap is about a 22 billion market cap asset, and it lets you swap from coins to coins on mostly the Ethereum network, right? So there's a version of that called Pancake Swap on Polkadot, right? And same thing, they let you switch different digital assets within itself. The market cap of Polka is about 4 or 5 billion right now, so like less than a quarter of what Uniswap is. So it's pretty big market cap, right? Riskier. This would be put a small part of your portfolio if you're going to get into like projects that are newer, that are not established yet. But they pay you, I think it's an 88% annual interest on that coin. That's almost double, right? So those are huge passive rewards. And now I'm going to go on a side note rant, and we'll come back to all this like staking details. So understanding, people didn't really use this terminology, but now it's getting more and more viral. Web 3.0. So the other day, like 2 days ago, I'm sitting on my couch and it's at 1:30 a.m. Of course, I'm doing my lever trading. And then I have a chick sitting beside me, and like I refresh CoinMarketCap, and I'm like super disappointed in myself. I'm like, there's a new project that launched. It's the 5th or 8th biggest project in crypto right now. It's Internet Computer, I think it's called. It has like an infinity sign sideways and I'm like, I was very disappointed in myself. I was like, how did this drop and I'm not aware of it, right? The thing that made me kind of, again, and then I also looked at myself, I'm like, this also came out 1 hour ago and I'm already aware of it. So I'm grateful for that. But then I looked the next day and there's guys in the space. I know one guy like Da Vinci, J15, he's been in the space 10 years and he didn't see this project coming. He said, where did this come from? So seeing OG guys like that in the space miss what I missed, I was like, it's okay, I can live with it. So Infinity is Internet 3.0. They have this huge market cap. I only analyzed it for a few minutes. So to do your own research, I'd say it's too early to invest. Let it kind of correct and see where it falls. Because even if it booms very high and then corrects at a higher number than today, that's still a safer purchase than buying it kind of in this unknown first few days. There's nothing to gather on the charts. It's kind of nothing but wick slowly down since you got it. So kind of let it find its ground. But the point I'm making is Internet 3.0. This is a protocol to scale. So for the people that understand internet more, like think of Bitcoin, Ethereum, Polkadot, all these things we talk about, Binance Coin, as sort of like HTTP of the internet. It's the base layer, right? Now what tons of people are building, and we don't know who's going to win, and I think there's going to be lots of winners on different platforms like they did with the internet. It wasn't just one company, right? We're looking for the www. We're looking for what's going to able for us to scale this technology from a few hundred, a few thousand transactions to hundreds of millions or as many as we need. So there's already many things working on this platforms. And look, something dropped literally 2 days ago and it has, I'm not gonna butcher the market cap, but it has to be over 10 billion if it's in the top 10, right? So something literally launched and right away it's in the top 10 of our ecosystem. So clearly Internet 3.0 is coming. So the concept you have to grasp and understand where the future is heading is centralized servers underground that are run by corporations and governments is not the future of the internet. We have a new internet coming. And how that new internet is going to be powered is your cell phone. Let me explain. One cell phone, the average smartphone today, whether the US actually went to the moon or not is a separate conversation, but let's say they did, for sure they went to space, right? Was all the computing power they had on the planet, all the computing power they used to get there, your cell phone is more computing power than that. Your one little cell phone that we're using. And most of us are looking at friends' pictures and animals and Googling some stuff, like YouTube being one of the most complicated things we use on it, right? So the amount of computing power we have is so far beyond what we use on our phones. So how Internet 3.0 is going to be powered is going to be tons of these staking applications we talked about. And what's going to happen is the future of the decentralized Uber, the decentralized Airbnb, the decentralized Instagram. So when you go to bed, you're going to have probably like an app where you're going to just Google it yourself, or you're going to do a search engine. You're going to, what gives me the most rewards for my computer, my cell phone computing power while I sleep? And if you have an average smartphone, you'll probably make, I'm just throwing out random numbers, $1, $10 a day, just for having a cell phone and plugging in. And also it's choice. Talk about choice and excitement. Now as a human being, you might be like, okay, I had a bad experience with, say, decentralized Lyft, decentralized Uber, just to make argument. I had a horrible experience with decentralized Uber. I don't want to power their network, even though I'll get $8 a night for powering them, but I only make $7 for decentralized Lyft. But you that's why we talk about there's so much change going on where people are willing to make a little less money to do better. And not only that, they'll choose a decision that they believe in more that'll make them less money. That's the exciting part of the world we're entering. So people are going to be choosing to power these new economies off of their cell phone. Now, guess what? Where staking comes in? This is a person who just has a smartphone. Now imagine you actually have some wealth. $1,000, $10,000, $100, $1 million, whatever your number is, right? All of a sudden, instead of making $1 to $10, you might be making $10 to $100 every single night just by passively powering it with your phone was more than enough power to have the encryption needed to launch a staking platform. There's already tons of people staking various coins on their phones. So clearly we have the computing power and some to do staking. Now you could add or buy the ecosystem you believe in and power it at night when you're sleeping, not using your phone. And that's where we're heading. So also the exciting thing about this is right now, like when Charles, we just started, he had to educate people what residual income is, passive income, money while you sleep. That is going to be the common day-to-day life for every human being in the future. And that, like, not knowing that will be like not knowing what electricity is, right? And that's an exciting thing that's here to come for all people. Now I'm going to give some options for people who are not necessarily in the tribe I would recommend, but absolutely the safest and probably the best way for a majority of people who are not so risk averse like myself to gain residuals in cryptocurrency is a platform called BlockFi.
Okay, so
most people know on Facebook, BlockFi, F-I.
Yeah, so write that down, people. All right, BlockFi. So most people know, obviously, Facebook, because we're talking on the internet, right? So there's a big, if anyone watched the movie or followed the how Facebook came up, there's these two famous twins, the Winkleboss Twins, that they claim they were the main idea, or they were the big chunk of the idea behind what Mark Zuckerberg ended up building. But he didn't give him the credit. They ended up suing him and actually winning, I don't know, X amount of millions of dollars. So success for their end. So they're huge Bitcoin guys. They got into the space like, I don't know when, if not when it started, like when it definitely got, like when it just got it picked up as momentum in mainstream 2013, 14, whatever year it was when they got in. They're the ones that are very active in the space. So they're the ones behind this platform, BlockFi. Now, why BlockFi is awesome is they insure you up to $250,000. So as most crypto things I talk about, if you make a mistake, it's on you. And I'm a true believer, and that's the real OG way, and that's the way you should be learning how to do crypto. But if you are already an accredited investor, or you have massive amounts of wealth, you don't need to take risks like the younger people, like people like myself, right? You don't have to. You're in a good place. So why wouldn't you just put it into a place like BlockFi? You know it's insured. Find other options like get your coins off the internet. So it's definitely a solid option. And they pay you from 6 to 8.6%, depending on if you're staking Bitcoin or Ethereum, right? But still, let's say 7% average, up to 8.6. I am pretty good with the numbers. So you could buy and you don't have to lock it in there as well, just to call the platforms. That's the amazing thing about the world. So what do banks pay these days? 0.5%, 1%. Look at the numbers we're talking about, right? Now there is, back to the riskier people, right? So we have the safe people. People go into BlockFi, it's insured, you have the KYC, but there's tons of benefits to that if that's what you're comfortable with. Now for the people that are more on the other side, that just like signing up with emails and passwords, I would not hold a big chunk of your wealth. I would, even whatever your portfolio is, if you want to be risky, okay, put like 10, 25, maybe 33% of the Bitcoin that you own. But because it's an exchange and things could happen, obviously keep the bulk off the internet. If you have a tiny portfolio you're starting with and you want to be risk adverse, I would still say build a habit of keeping it in safer places. But Bybit, which is an exchange for like lever trading, you can do spot trading as well. If you have Bitcoin and you deposit it there, you don't trade it. So in my opinion, Bybit would be as safe as holding it on Coinbase, Binance, Trust Wallet. It's equally as safe as any other exchange. Exchanges is the most dangerous place to keep your crypto, but tons of people do it and get away with it. And a lot of the time, nothing really major happens. So if you're one of those people that are already keeping all your cryptocurrency on exchange, right, and you have Bitcoin sitting somewhere by Bybit, besides Bybit, reconsider. Bybit, just as of a few weeks ago,
is now offering you 15% interest on your Bitcoin just by holding it, not trading, not doing anything. So instead of holding it on a trust wallet or a blockchain wallet, if you just move it to Bybit and you hold it in their wallet, don't do any trading, nothing like that required. You'll get 15% interest on your Bitcoin annually. And that is massive. That is no small number to tease at. So to just recap quick, right? We have for mining, staking came. Staking is using digital assets or leveraging the network to power its security, right? And then there's also ways that you could just use intermediaries, put your coins in, and they'll do it on your behalf, right? These are all options when it comes to making money residually through crypto. There's tons more to go in, but we're just kind of keeping it to the more basic and attainable for anybody to achieve.
All right, we're going to take a quick break, and we want to hear from our sponsor. So let's say hi to our sponsor. Give a big round of applause to our sponsor. Because if it wasn't for them, this show would not be possible. So we'd like to thank them so much for jumping on board, for helping us out. If you need to give them a call at 647-866-6969. At 647-866-6969. Stay tuned. We'll be right back.
Immigrant Women in Business, IWB, is a non-profit organization bringing together women from over 50 different countries around the globe. These women have now made Canada their home and share a common goal of providing value to their new sisters. Our motto of "We are stronger together" resonates with all members, and with a diverse membership of business leaders, entrepreneurs and community builders, our goal is to make Canada better and provide guidance and leadership to those that follow.
CMJ Entertainment is a one-stop shop. CMJ Entertainment helps people do any type of events, and it's a marketing tool as well. So we'll cover everything from start to finish. If it's a wedding, we'll make sure your wedding is over the top. And if it's an event, we make sure that everybody gets information at the end of the day. Give us a call at 416-414-8964 or online, go to cmjent.com. Yes, we are back live. How's everybody doing? All right, so we just run it over some more. So earlier we're talking about, starting off slow, what to do, how to do it, the different markets, how to put stuff away. Like, if you have the big money, take it off the platform and put it into a savings, a keeper key, a little device like this. It's your own, you keep it off. Now we're talking about how to do putting it on a platform for residual income. Okay, so it depends on what level you are. If you haven't been watching our show, we are helping you to find out what type of person are you. Are you a safe person like me that just wants to put it in and watch it grow and be safe? Or are you a risk taker like Maria there that's just throwing it all over the place and hey, let's try it. It went up, it went down, let's move it up, let's move it down. Or are you taking your time and diving into something you like Peter, where he says, okay, this is my lane, I like it here, this is what I'm going to do. So there's 3 different versions of what you can do. There's 3 different personalities. The main thing, like Peter always says, is research. Find out where's your lane. You know what I mean? We might be all different people, but we can all still make a good amount of money just doing it different ways. All right? Let's dive back into. So Maria, I saw your pen on fire.
Okay, so for the last portion, you talked about bybit. I didn't. No, the last one you said Bybit.
Oh, Bybit, BYBit, Bybit is the platform.
Bybit. And then this platform is also like a wallet. Is that how it is?
So everything we talked about, exchanges are essentially wallets of Bitcoin, a bunch of other coins. So anything that's an exchange, just think of it as like a wallet of all these different digital assets. So every exchange will have a Bitcoin wallet built into it.
Okay, and the BlockFi is the same idea. It's an exchange.
I think BlockFi does have an exchange. I don't believe that most people use it as an exchange. I think most people just use it as a way to keep their crypto insured. There's very few platforms that I know of around the world where you could like have your Bitcoin or Ethereum, whatever it may be, insured if something happens. So I think it's mostly used for that, even though most likely it does have an exchange. Like, why wouldn't it, right?
Got it. Yeah, perfect. No, that's a good piece of information today.
All right, so here's the 2, BlockFi is number 1, and there is this bybit. Is this the one right there? All right. So hey, take your time, research it, go online, see what you see what you find. All right. So here it is. You're worried about the Ethereum going up and down, and you're all excited. So it's funny thing is when you guys are talking, I'm on the app. So I downloaded the app, and I'm like, the Binance app, and I'm looking at the Ethereum up and down, and it changes 24/7. So yeah, yesterday it went crazy, and if I'm looking at this wrong, then if you can focus in on there,
Yeah.
drop down a little bit again, and it goes up and it dropped down again. So, you know what I mean? If you're all excited at 1 minute and the next you go to sleep, like Peter says, you wake up 1:30 in the morning and you go, wait a minute, where did some of that money go? So, you got to do what you got to do. Talk about let me ask you a question, Peter, and this is off the books, right? It's all different. What do you think is easier, or is it the same type of network? Doing stock market or doing Bitcoin? Is it like the same realm? If you're good in stock market, you'll be good.
No. The stock market is like stock. No. I talk to people in the stock market like this. That I love it because they know what they say to me. They go, "I wish I would love crypto, but I wish it would have a start and a close point." I'm like, yeah, that's between us and you. You guys want this comfort zone, bougie, cozy way of doing things. The new world is 24/7. No sleep for the weird. None of this. Then we all just trade between these 8 hours, and then we all agree that the market should be closed the other 16 hours. What universe do we live in? You know what I mean? I do not get along with stock people that are like, tell me, stop. I'm like, okay, bro, stocks are cool. If you have the skills, get some balls and trade some crypto. You know what I mean? So it's 24/7. It's way more volatile. And the thing is, bots and insider information have been ruling the stock market for who knows how many decades. You know what I mean? It's not a game. It's not an even playing field. Like when I got to Forex trading, I'm like, oh yeah, I'm really going to find out something about the yen before 10 million other or 100 million other humans do. What's the chance of that, right? But in crypto, there can be something that launches that minute on a telegram. And you have the opportunity, just like everybody else on the planet, every other corporation, every other bot, to take advantage. So it's literally like an equal playing field, as opposed to stocks. It's kind of like, I will warn, crypto has the bots entering now too. And if you don't know what you're doing as a trader, these people that have done this in the stock market for decades have more and more aggressively been entering the crypto space. And they'll literally, like, you can see it happen, like unnatural trades. Like you were saying, Charles, you see it going down. There'll be somebody who's sitting there, like someone that's actually risking wealth that they need to trade. That takes some kahunas, right? But somebody who comes into the crypto market with 10, $100 million, let alone more, like crazy sums of numbers, and they know that if they built these bots on these 4 exchanges and they just sit there and the bot goes, hey, look, right now there's low liquidity. You could run the market down to this price, buy X amount at this price, and within literally a matter of minutes or a few short hours, you can make $250,000 or $500,000. Okay, awesome, but those guys aren't really risk takers. You know what I mean? They just applied a system that was broken, and right now, while our market caps are growing exponentially in cryptocurrency, they're not quite there where you can still manipulate them. Give it 5-10 years, and these whales playing these games, it's going to be even for everybody because the numbers will be so big that manipulating it with even $100 million will be very difficult if this progresses the way we're going as a technology. But right now, you're starting to see people come in and manipulate the markets, which is not my favorite thing, but it's what's happening.
Yeah, and I like the one part you said, and I think people didn't understand the one thing is one system closes at night and one is ongoing 24/7. It doesn't close. It's on 2 o'clock in the morning, it's still there, 6 o'clock, 8 o'clock at night, whenever it is, it's still going, right? It's still a moving machine. So I guess that's why you said that your couch is your office. 1 minute you're sleeping, next minute you dive up, you look, you sleep, and you dive up, you look.
Yeah.
Same process. So there you go.
Actually, the 2 biggest losses, again, I was a solid day trader for a long time. I know I have the skills to make solid spot trades. Crypto lever trading really only came out about 2 years ago, but a year and a half, it started getting more relevant. So this is something that I haven't conquered. So it's like a challenge for me. It's exciting, you know what I mean? And actually, if it wasn't for two very big, it's called getting wrecked when you leverage your account so much and it drops so much, you literally lose your whole account. So I got wrecked twice for two pretty big numbers and once in Ethereum. And yeah, that would have broke a lot of people, right? But that's part of the learning process. And why I'm saying this on the 24 hours, both times I got wrecked was Sunday, on like a Sunday afternoon or night. So it's like if I was in those traditional markets, and yeah, it's easy to be fucking safe, but you're like over leveraged. You think you could just enjoy your Sunday night. You're like, oh my God, I just lost a year worth of income. You know what I mean?
It's a chance you
for
take,
some.
and that's what we're talking about.
I know, before I forget to, we're talking about all the staking.
Huh?
Oh, he froze on us. All right. So before we move on, just remember, we're going to put his information up on the screen while his data switches over. All right. There it is. You can grab his website. Go there right now. Go to his website. And if someone's contacted in the chat, if you did win, we're going to reach out to you. Yes, we will reach out to you. Peter's been reaching out to all the past winners, and he will get to you one at a time. So don't worry if you won. We will get to you. All right. So until Peter gets back, what is your main stake? Hold on. Here he is. There he is. So what's your main? That's okay. What's your main thing out of this whole thing, Maria?
Well, I do consider myself, my personality, a little bit risk taker. So I like, putting a little bit there, switching here and over, like practicing. Peter taught me to just practice from one wallet, transfer from one to another, $10, $1. So that's what I've been doing. So that I learn how to use the wallets and transfer the money over. And listen, when someone tells you buy into it, I remember clearly when he said start buying Ethereum. Start buying Ethereum. And Maria didn't listen. And Maria didn't buy. And Maria didn't buy enough. I bought, but too little. And then when it was 4,000, I'm like, shoot. Then I decided to start changing it. So now it's 5,200. I'm going to start buying more. That's what I learned.
So, ladies and gentlemen, if you're watching the show, whatever Maria does, do the opposite. Listen to Peter. Listen to Peter. All right, everybody. That's our show. Thanks for watching.
Let me add up one quick gem before we go. I forgot to mention we're staking, right? So it's a platform, much riskier. Do your own research, right? It's called Woo, WOO. And anyone that's a hip hop fan, Pop Smoke passed away in a big song called The Woo. So when I see that, I was like, oh, it's kind of cool, The Woo. It's a platform kind of like Uniswap, but if you look at the volume Uniswap does, and you look at the volume they do, they're very undervalued. Like they could easily come up and do a multiple times their money, but even if they don't, that's a platform that gives you 40% annual returns. Where I would say like Pancake Swap is a little bit riskier. I personally wouldn't put nothing but a tiny percent. And if I'm going to do a tiny percent, what's the point of staking it? That's kind of my logic. If I'm going to put like 0.1% of my portfolio, and then what? That's more of me I wouldn't even bother staking that. I would just treat it as like a speculative asset, right? But if you have, let's say, a bigger chunk and you do your research on the Woo, you could actually put a few percentile or maybe even 10% if you have a small portfolio into something like that and stake it. And those are big returns, right? And that's assuming the coin stays the same price, let alone if the coin goes up on you. So that's a little gem for anyone that's a little bit wants to go deeper in the space. That's a little bit lower cap project that, hey, you never know, right?
All right. So what we'll do, we'll pull that up next episode and we'll find it out. All right, everybody, be safe, trade well, be smart about it, do your research. And if you need any help, you need to go online. There it is. Go to his website, go into the chat, send him an email, say, hey, Peter, what I want to do is, I know what you told Maria, she didn't do it. I want to do it. So how can we get it done? That's all you got to put in the thing.
Yes.
All
Call
right.
Peter, not Maria. Call Peter.
But here's the thing, though, before we go, we're joking around about it. Everybody's different. And that's what you have to understand. One person's rhythm might not be the same as somebody else's rhythm.
Yes.
So just because one person's doing it, you're like, oh, Peter said do this, this, and this. It might not work for you. So just make sure you do your thing. And that's what makes you feel comfortable. So there you go. Because who knows? Maybe next episode, Maria's going to come back and say, ching ching, I did it. So you never know, people. All right, everybody. Stay tuned. We'll see you next time.
Thank you, guys. Love you.
Has come to an end. But the fun doesn't have to stop here. If you have any questions, suggestions, or feedback, head over right now to Twitter and Facebook and like, share, and get involved. Join us next time.
Please be advised that this podcast is meant for educational and informational